So, you're doing everything you're supposed to. You're saving your money, you're being responsible. But when you look at your accounts, does financial freedom still feel like it's light years away? If you feel like your money just isn't growing fast enough, I'm gonna let you in on a secret. The wealthy don't just save money, they invest it in specific assets designed to build wealth, and fast. In this video, we're breaking down 5 strategic assets, from powerful traditional investments to the absolute cutting edge of digital finance that could put you on the fast track to financial independence. And you'll definitely want to stick around for asset number 3, because it's creating new millionaires at a mind-boggling pace. Now, this isn't about get-rich-quick schemes. This is about a fundamental mindset shift. It's about understanding that true wealth is built through ownership. Think of it like this: you can either work for a wage at the apple orchard, or you can own the orchard itself. We're talking about owning pieces of businesses, chunks of property, and the actual infrastructure of our future. These strategies take courage and education, but they are the difference between a portfolio that plods along and one that sprints. If you're ready to learn how to make your money work smarter, harder, and faster for you, let's get into the first asset. Alright, let's kick things off with asset number 1, the absolute bedrock of modern wealth: stocks. I know what some of you are thinking. Stocks? Really? Groundbreaking. And you're right, it's not a secret. But how people strategically use stocks for rapid growth is something most people completely miss. We're not talking about just buying an index fund. That's like buying a reliable family sedan. It's safe, and it'll get you to your destination eventually. We're talking about targeting specific companies and sectors that are more like high-performance race cars, designed for speed. Historically, the US stock market has returned about 7 to 10% per year on average. But to hit the accelerator, you need to find companies that are not just in the economy, they are actively reshaping it. Think about leaders in tech and healthcare. These growth stocks are shares in companies outperforming everyone else because they're solving huge problems. The key is finding companies with a strong competitive moat, an advantage that's like a castle wall protecting it from invaders. This could be a killer brand, unique technology, or a huge user base. You want to see growing revenue and a clear path to future profits. And the best part about stocks is their liquidity. This means you can sell them almost instantly, like trading cash in your wallet. It gives you a flexibility that other assets, like trying to sell a house, just don't offer. But let's be real, high growth comes with high risk. The market can be unpredictable. Downturns can hit even the best companies. That's why your homework is non-negotiable. You aren't just buying a ticker symbol, you're becoming a part owner. Know the business, the leadership, and its place in the market. Do that right, and the portfolio of high-growth stocks can be the engine that drives your wealth. Asset number 2 has been making people rich for centuries: real estate. But we're going to look at it through the lens of speed. Real estate is a tangible asset. You can see it and touch it, but its real power comes from one word: leverage. Leverage is like using a simple crowbar to lift a giant boulder you could never move with your bare hands. It means using the bank's money to multiply your own power. For example, you can control a $500,000 property with a down payment of maybe $100,000. If that property's value goes up, you get the profit on the full $500,000, not just your initial cash. That simple concept is how fortunes are built. On top of that, real estate can generate cash flow every single month from rent, which pays your mortgage and puts passive income into your pocket. To be strategic today, you have to watch the trends. Remote work has changed everything. People are using strategies like house hacking, buying a multi-unit property, living in one part, and letting the tenant's rent pay your entire mortgage. Suddenly, your own housing is free while you build equity. The demand for short-term rentals and building small accessory dwelling units, ADUs, or granny flats can also dramatically increase a property's income. Of course, the risks are real. Real estate is not liquid. You can't just press a button and sell a house. And yes, you will get calls about a leaky toilet at 2 a.m. It comes with unexpected costs and market downturns. You either need to be a hands-on manager or hire a good one. But for those who can handle the complexities, the combination of appreciation, cash flow, tax breaks, and leverage is an almost unmatched tool for building serious wealth. Alright, now for asset number 3. This is the one I told you to stick around for. We're stepping away from the public markets and into a world where life-changing gains are possible: private equity and digital businesses. This is like getting the chance to plant a tree instead of just buying apples from the store. You get in on the ground floor of the next big thing. Simply put, this is about investing in companies before they're on the stock market. It could be providing seed money to a startup or buying a piece of a proven digital business like a software as a service, SaaS company. These businesses are amazing because they are incredibly scalable, like a blueprint that can be copied infinitely with very little cost. Instead of owning a tiny sliver of a giant public company, you can own a meaningful chunk of a small, fast-growing business where your investment can actually help shape its future. Now, for a serious reality check, this is the big leagues of risk. For every superstar band that makes it big, there are 1,000 talented musicians who never get a record deal. The hard truth is that most private ventures fail. Private equity portfolio companies are about 10 times more likely to go bankrupt than other companies. These investments are also profoundly illiquid. Your money is locked up for years. While access is slowly opening up, this has traditionally been a playground for the very wealthy for a reason. But if you have a high risk tolerance and can afford to lose what you put in, owning a piece of the future before it arrives is one of the fastest ways to accumulate wealth. Hey, if you're finding this helpful and it's sparking some new ideas for your own financial journey, do me a quick favor and hit that subscribe button. We go deep on actionable strategies like these every single week, and I'd love to have you as part of the community. Asset number 4 is easily the most controversial and volatile one on the list: cryptocurrencies. Love them or hate them, you can't ignore the fact that crypto has created wealth at a breathtaking speed. Investing here is like being an early explorer charting a brand new continent. The potential for discovery is immense, but the dangers are very real and the territory is completely unpredictable. The core idea is that you're investing in a new, decentralized financial infrastructure. Some see Bitcoin as digital gold, a hedge against inflation. Ethereum is more like a decentralized world computer that powers new financial applications and digital art. You're betting on the technology that could reshape the internet as we know it. The potential for growth is undeniable, but let me be crystal clear. The risks are extreme. Volatility is off the charts. It's not uncommon for prices to drop 50% or more. The market has gone through brutal crypto winters, like the shakeout between 2022 and 2024, which felt like a deep freeze full of company collapses and hacks. This is not your retirement fund. This is money you have to be 100% prepared to lose. But for those with a belief in the long-term potential of this technology, a small calculated bet here offers a shot at returns that are simply impossible anywhere else. And that brings us to our final asset, number 5, which might just be the smartest long-term play of them all: AI infrastructure. This is based on a classic idea. During a gold rush, the people who make the most reliable fortunes aren't the prospectors, but the ones selling the picks and shovels. AI infrastructure is the picks and shovels of the AI revolution. It's the physical backbone, the specialized semiconductor chips, the massive data centers, and the power grids that fuel it all, while everyone is scrambling to find the next winning AI app, the gold. The truly strategic move is to invest in the essential tools that everybody needs. So how do you invest in this? You can buy shares in public companies that manufacture the chips, build the servers, or operate data centers. This way, you're betting on the entire AI ecosystem's growth, not trying to pick one winning company out of thousands. You're investing in the essential plumbing of the next industrial revolution. The risks here are substantial too. There are geopolitical risks tied to chip supply chains, and today's cutting-edge hardware could be obsolete tomorrow. But if you have a long-term view, investing in the companies that are literally building our AI-powered future is a strategic move that could pay off enormously as this tech shift accelerates. So there you have it. 5 strategic assets for rapid wealth accumulation. We've hit on high growth stocks, leveraged real estate, high reward private equity, volatile but powerful crypto, and the foundational play of AI infrastructure. The big takeaway here isn't to be reckless, it's to be strategic. It's to understand that real wealth isn't just earned, it's owned. You have to own the engines of growth, whether that's owning the orchard, selling the shovels, or funding the next big thing from the very beginning. The path to financial freedom is paved with knowledge and disciplined action. Do your own research, never invest in anything you don't fully understand, and start building a portfolio that gives you multiple ways to win. Which of these assets are you most interested in exploring? Let me know in the comments below. I read every single one. Thanks for watching, don't forget to like and subscribe, and I'll see you in the next one.